Welcome to today's market report.
US stocks declined broadly while oil prices and treasury yields pushed higher on Monday as investors refocused on risks from conflict in Ukraine and the US Federal Reserve's actions on inflation. The Dow fell 0.58%, S&P lost 0.04%, Nasdaq dropped 0.4%. Boeing shares fell by 3.6% after one of its 737 jets crashed in China. Global stock markets rallied last week in anticipation of an eventual peace deal on Ukraine. But on Monday, Ukraine defied a Russian ultimatum that its forces lay down arms in Mariupol, while the European Union considered a possible energy embargo against Russia. The Pan-European Stock 600 index rose 0.04%, and MSCI scheduled stocks across the globe shared 0.24%. The market is digesting the impact of tighter financial conditions, higher oil prices, and continued geopolitical uncertainty against a backdrop of growth, at least in the US, according to PIMCO. The US market will continue to benefit from outflows from the rest of the world, given its relative insulation from oil and geopolitical tensions. Bank of America's Global Fund Manager survey last week had a bearish bias, with cash levels the highest since April 2020 and global growth expectations the lowest since the financial crisis of 2008. Long oil and commodities were the most crowded trade and vulnerable to a pullback. Fed policymakers last week raised interest rates for the first time in 3 years, and most see the short-term policy rate pinned for 2 years near zero at 1.9% by the end of this year, a pace that could be achieved with quarter-percent point increases at each of their 6 policy meetings next. The benchmark 10-year Treasury notes rose to 2.307%. GBP/USD is juggling in a narrow range of 131.56 to 131.70. The common currency slides some 0.34%, retracing from 1.1070. The dollar index advances 0.27%, trading at 98.502.
This is today's market news. Thanks for listening. We'll see you next time.